reporting from inside the courtroom has actually been quite lively on the daily basis. A lot of questions about the essence of this trial, Kaylee, of course, with the 4 potential trials that this former president, could endure here. This was always seen as the weakest by a lot of the folks we talked to. I think Nick Ackerman might be an exception there who really cites the strength of this case, but defining it has been a real problem for a lot of people. What is it actually that Alvin Bragg is bringing Donald Trump into court for? Is this a manipulation of documents case, a falsifying documents case, or is it an election interference case, or is it actually both?
I think they're trying to make the argument that it's actually both. Yes, he falsified business records, facing 34 counts of that, but it's a felony because it was done so with the intent to violate election law, is our understanding. But of course, Jim Zirin probably has a better understanding than we do because he is a legal professional, former assistant United States attorney for the Southern District of New York. Jim, it's always great to have you here on Balance of Power on Bloomberg TV and radio. Joe brings up an interesting point because a lot of the questioning of witnesses that we saw last week, included David Pecker, was around whether or not this really was intended to help Trump politically. So far, do you think the prosecution is having success making that case?
Well, I think Pecker was a very damaging witness against Trump. He professes to be a friend of his to this day. And Trump may conclude with friends like that, who needs enemies? Because Pecker really set the table. He put flesh on the bones of the whole case of how from the time Trump first announced for the presidency, the National Enquirer was publishing damaging information about his political rivals and also trying to take polls that weren't necessarily accurate, which showed that Trump would be a viable candidate, as later he turned out to be.
How difficult will it be for Alvin Bragg, or are you already seeing the path here to make this an election interference case at the same time?
Well, I'm not convinced that calling an election interference case is the greatest way forward. It is an election interference case, and there are political or legal scholars in my respect, like Norm Eisen, who first brought it out and who stressed it's the 2016 preview to what happened in 2020, making fraudulent statements in order to seize power. So there is a parallel there. But I'm not so sure the jury is willing to buy that because it plays into Trump's claim that this is all a political prosecution. There is the other side of the coin. This is really a business integrity case. It's a simple case. It's a case of falsifying business records with the intent to commit a crime, the crime being either election interference or tax fraud or both federal and state election interference. Now, that in mind, there really isn't that much to it. You have 34 obviously false documents, business records of the Trump Organization, which are the mute witnesses that really put Trump in the soup. Those documents, 7 of the 9 checks he personally signed. There is testimony of Michael Cohen, whose credibility they will challenge, but Cohen's testimony is going to be corroborated. First by Pecker, it'll be corroborated by other witnesses as the prosecution moves along. So I don't think it's that difficult a case if Bragg plays his hand deftly and emphasizes that it's a white-collar crime case. My old boss in the U.S. Attorney's Office, Bob Morgenthau, the legendary prosecutor, used to say, you can't prosecute the streets unless you prosecute the suites. And suites, S-U-I-T-E-S, and meaning the business suites. And he did. Other prosecutors have. And that makes this case not that unusual and not a selective prosecution where they've singled out Trump, but rather a prosecution that's a garden variety case involving business integrity.
Yeah. Except this one just happens to involve a former president and current presumptive Republican nominee. But I do take your point, Jim. Of course, there's something else in regard to this case. In addition to witness testimony that we're waiting for this week, on Thursday, we will have a second hearing of arguments related to whether or not Trump has violated the gag order he is under. Even more counts of this, according to the prosecution, have come up since the last time Judge Merchan heard these arguments. But what can he actually do here? What consequence does this ultimately have if he is found to have violated it and gets, what, $1,000 fine for each thing? That's not really a big number for a billionaire.
Well, let me get to that for a moment, but I want to answer you because he is the former president of the United States, and never before in history has a former president of the United States been charged with felonies. But the law is not supposed to be about who the defendant is. The law is supposed to be about what the defendant does. And that's what this case is all about. Now, as to the gag order hearings, I don't believe that the judge is going to clap Trump in irons and put him in jail for a day, for an hour, or for a year for violating a gag order. I think he'll be very tough on Trump and say the next time it happens, it's going to be very difficult for you. But I think he will fine them. He doesn't have to limit himself to a fine. He can put him in jail for contempt of court, even if the DA hasn't asked for that. But the DA has been very moderate. He's asked to fine him. There's really the issue of delay, because if he puts him in jail for any significant period of time, it's going to delay the trial. And that's the last thing the judge wants. That's the last thing the prosecutor wants. Undoubtedly, Trump will appeal, and undoubtedly, by the time the appeal is heard, they'll say Trump has served enough time. Let's go on with the trial. But it may delay the trial for 30 to 60 days, which nobody wants. So I think that there probably will be a fine imposed, and there probably will be a very stern Dutch uncle talk from the judge that what he's done violated the order, what he's done in terms of attacking witnesses and the families of prosecutors is intolerable and violates the order. And next time he does it, the judge is going to be very hard on him.
Jim, we're out of time. Just very quickly, just to make sure that our listeners and viewers understand, and I'm asking you legitimately, if you or I were in that position, if we had violated the gag order to that extent, what would happen to us?
I think we'd go to jail. No question about it. And
so then Trump, obviously then the law does not apply equally already. We've established that.
I think we've seen, as we saw in the immunity argument in the Supreme Court, Trump has gotten a deference from the courts unlike anyone else in a country where no man is supposed to be above the law.
Yeah.
All right, Jim Zirin, former Assistant U.S. Attorney for the Southern District of New York. Always great to have you on the program, sir. Thank you so much for joining us. Again, today is not a trial day. Trump is getting a day off, but proceedings will resume tomorrow. Meantime, Congress just had several days off after they passed that supplemental funding and foreign aid. They took a recess, and now they're back in town and will be in town for 4 weeks, allegedly. The question is, how much are they going to get done in that time? Jack Fitzpatrick, who covers Congress for Bloomberg Government, is joining us now, hopefully with an answer. So, Jack, they're back. What's the first order of business?
Well, they still have things on their to-do list despite taking care of some of the major things. Yes, the government is funded through September 30th, but in the near future, by May 10th, they need to reauthorize the Federal Aviation Administration. That's something that the Senate is supposed to work on soon, and then the House will try to pass that bill. They just put a bill out last night with bipartisan support. So that's probably the number one thing. They've got the Affordable Connectivity Program, the affordable broadband access that there is interest in renewing, that's supposed to expire in the next couple of days, but that's not that doesn't have a vote teed up just yet, so that's an unknown. And of course, when they finished funding the government through September 30th, they were already late for the next year. So they do have to negotiate the basics of how much money they're going to spend in fiscal 2025. There's a little more symbolic stuff. There's an anti-Semitism bill that directs the Department of Education on how to interpret the meaning of the word anti-Semitism. That may get a vote this week in the House. So a number of things on the to-do list that aren't quite as threatening as them struggling to avoid a shutdown, but theoretically they still should be productive over the next few weeks here in Congress.
I know it's 90 degrees in Washington today, Jack, and we're all getting ready for summer at some point around here. But there's a lot of talk about Christmas trees on Capitol Hill. If this FAA extension happens, how many ornaments will be added to it?
That is a good question. That is always a concern. The sort of proverb here in Congress is if you weigh down the Christmas tree with too many ornaments, then it's tough to pass. It's not going to pass. This was a wide-ranging bill that was released last night, but it was basically an FAA and related measures kind of bill. We have not yet heard of things being attached that would tank its chances of passing. There are always members who want to do that, but given that they negotiated a bipartisan measure that the Senate wants to work on passing and then the House, it should not be impossible for congressional leaders to be disciplined and not allow too many things. If you want to legislate and you've got something you really dearly want, there will be other legislative deadlines, maybe after the election, but it is a concern always with a major bill, but not something that looks like it's going to tank this bill.
And finally, Jack, as you're on the Hill right now, you sensing any vibes around tension surrounding this motion to vacate? Is anyone looking around thinking, how long has Mike Johnson got in the job? Or did everyone come back from recess basically under the opinion that Marjorie Taylor Greene is backing off?
It's not entirely clear if Marjorie Taylor Greene is actively backing off. She has still not triggered the vote itself that she could trigger to require that vote on the fate of the speaker. It may be a bit of a moot point other than taking up floor time. The Democrats appreciate the fact that they allowed a vote on the foreign aid series of bills that were packaged together. Johnson does not appear to be in dire straits. If there are a few members led by Marjorie Taylor Greene who want to demand a vote, there may be pushback from their colleagues. It does not seem to be something that will change the fate of the speaker. It is possible that the vote will happen. It may get some attention for some members, but nothing has changed in terms of Johnson still at least having some appreciation from Democrats who don't want to see him kicked out over allowing a vote on Ukraine aid.
Jack Fitzpatrick with us from the Hill. Great update, Jack. His reporting at Bloomberg Government is the one you want to watch, specifically when it comes to appropriations. It's great to see you, Jack, for everything that's happening in Congress here. Of course, Kaylee, really important development late in the program here as Speaker Mike Johnson calls for action against college campuses where we're seeing these pro-Palestinian protests, one of which in 5 minutes is going to be up for eviction on Columbia's campus.
Yep, 2 p.m. was the deadline for students to leave the encampment or face suspension from the university. So, of course, there will be more coverage of that on Bloomberg TV and radio throughout the day. And Joe and I will be back at 5 p.m.
We'll meet you then as we hand things to New York right now. Emily Graffeo and Tim Stenovec. Bloomberg Business Week is coming up next on Bloomberg TV and radio.
One of my greatest advantages, I own my company 100%. No board of directors. I make a decision, we move. And I had a guy say to me, runs a big media company. This guy ran a major division, Warner Discovery. Okay. It was just Warner Media at that time. He says, you know what, when we sit in our meetings, we don't talk about Disney. We don't talk about Paramount. We don't talk about Sony. He goes, you know who we talk about? I go, who? You. I said, really? He goes, yeah, you. I go, why? He goes, we are giant battleships. And you're like a little speedboat. And if there's gold on the beach, you run rings around us, get to the beach, take the gold, and by the time we turn our battleship around, you've already taken the gold. I go, that's right. I'm always gonna be that entrepreneur. I started my company from my dining room table 30 years ago. 30 years ago. And I started by calling every television station, asking them to carry my once-a-week show. On average, they all said no 50 times, and I worked through about 50,000 no's to get 150 yeses. That guy that was at that dining room table trying to pay his phone bill is that same guy today, 30 years later. That fire is still in my belly. I still run scared, and I'm still running after that vision of building the world's biggest media company.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everyone. Live on Bloomberg TV, on radio, streaming on YouTube and Bloomberg Originals. It is a Bloomberg Business Week. I'm Tim Stenevec. My co-host, Carol Masser, is off today. Here with us in her place is Bloomberg News cross-asset reporter Emily Griffeo. Emily, thanks for joining us this afternoon. We got a big show, big week coming up. Stocks up, yields down as we kick off the week. As I mentioned, a big one because we're going to hear from Fed Chair Jay Powell on Wednesday. We'll get April's payrolls report on Friday. Also, some huge companies reporting, including Apple and Amazon. We'll get to all that, but first, we want to get to Jay Powell because today's big take shows that Powell's hawkish pivot has just begun. Also, Tesla having its best day in years after Elon Musk's quick visit to China pays immediate dividends. Also, have you been to Las Vegas recently, Emily?
I have not.
Okay, well, it's not yet. It's definitely having a moment right now. I feel like several of my friends here in New York have gone just to see concerts at the Sphere.
It's all about the Sphere.
It's all about the Sphere. We're actually going to check in with the youngest CEO on the Strip. The CEO of the Apollo-owned Venetian Resort is going to be joining us. Also on energy, more than a dozen U.S. nuclear reactors shut down in recent years. Why those shutdowns may actually not be permanent. All that and more over the next hour on Bloomberg Business Week. First up, though, a check of the day's trading day and business news. Welcome back, Charlie Keller.
Hi, thank you very much. And here's what's going on. Stocks higher across the board right now. We've got gains for the Dow, the S&P, and NASDAQ. S&P right now higher by about 0.3%, up 15 points. Dow Industrials up 155 now, up 0.4%, while the NASDAQ Composite Index up 66. For NASDAQ, that is a gain right now of 0.4%. 10-year 4.61% with a 2-year that's now yielding 4.97%. Spot gold up $3.91 the ounce, 23.41 on the precious metal, up 0.2%. On a retreat today for crude, West Texas Intermediate down 1.6% right now, 82.50 for a barrel of WTI. Elon Musk's visit to China paid immediate dividends. Tesla getting in principle approval from government officials to deploy its driver assistance system in the world's biggest auto market. Tesla shares right now up by 15%. One other development with Tesla, according to a report today from the California New Car Dealers Association, Tesla sold fewer vehicles in the state for the second straight quarter, suggesting its popularity in the state may have peaked. Again, Tesla up now by 15%. Recapping stocks higher, S&P up 14, a gain there of 0.3%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Really do appreciate it. Well, as we mentioned, the Fed kicking off its two-day policy meeting tomorrow, and Bloomberg Economics has this really cool tool. It's called the Fed Sentiment Index. It's powered by natural language processing. It's an algorithm based on more than 60,000 Fed headlines, and it shows that back in December, Powell delivered a major pivot. Okay, we knew that from just watching the markets and seeing how investors have reacting. There's a catch, though. 4 months on, with demand powering ahead and inflation stuck above target, Powell has been forced into a reversal. The index now shows that there's more work to do to bring inflation back under control. Tom Orlik is Bloomberg Economics chief economist. He edited the story that's today's big take, also among the most read on the Bloomberg terminal. He joins us from our Washington, D.C. bureau. So, Tom, explain what exactly the Fed Speak tool is. Tell us how it works, and also how it can give us some sort of preview of what we may hear from Jay Powell come Wednesday at the press conference.
Well, great to be here, Tim. What we've done is we've taken 60,000 Bloomberg News headlines on Fed Speak, the things which Powell and his team on the FOMC say to steer the markets on where policy is going. And we've trained a natural language processing algorithm to read those headlines as hawkish, neutral, or dovish. What that means is that anytime we get a new Fed headline, our algorithm can read it, assign a score to it, and we can tell you whether the Fed is trending towards cuts, towards hikes, or towards a hold at its next meeting. Now, the index right now is telling us something pretty interesting. It's showing that in December, there was a major dovish pivot. That was well-timed. We think it saved the U.S. economy from a looming downturn. But in economics, as in life, there's no such thing as a free lunch. And the same impulse which propped up growth is now also giving an additional impulse to inflation. Our index shows that's already prompted a mini reverse pivot by Powell. He's already moved back in a hawkish direction. We think that pivot has further to travel, perhaps as soon as this week's FOMC.
So, Tom, what did the natural language tool teach us in December that we wouldn't have been able to figure out without using the tool?
So that's a really great question, Emily. Let's go back to a lady called Ellen Mead. Ellen Mead was a senior economist at the Fed, left a few years ago to become a professor at Duke University. And she was one of the pioneers of using data science, machine learning, natural language processing to understand Fed communications. And what her early research demonstrated is that these data science tools, they can reveal insights which aren't kind of visible when we're just reading the headlines ourselves. And when it comes to December, what our index is telling us is that really this was a very significant pivot, one of the biggest monetary policy surprises of the current cycle. What our index is currently telling us, based on the latest readings from April, is that things have started moving back in a more hawkish direction, but really they've undone only a small amount of the stimulus that they unleashed with that December pivot. And that's why our US team, our chief US economist, Anna Wong, and her colleagues think that Powell has further to go in a hawkish direction.
Hey, Tom, one interesting part of the story that is included in today's big take is this idea that, well, with rates high, why are we still seeing inflation high? And different theories are put forth. And there's this theory that's gotten a little bit of attention over the last month when it comes to MMT and the idea that actually hikes from the Fed are a growth driver rather than a drag on the economy. Can you talk a little bit about that?
Yeah, so it's an intriguing idea, Tim. basically, it goes something like this. Households, businesses have got so much money in savings accounts and in bonds where they're getting higher returns when interest rates go up, that's giving a boost to spending power. And so perhaps Fed hikes aren't a drag on demand and a drag on inflation. Perhaps in the current cycle, they're actually a driver, boosting spending power and actually keeping inflation lodged at a high level. So that's an intriguing idea. It's an idea which has caught the attention of the markets, including from some big investors moving a huge amount of money around. Our view is that it's a bit difficult to support with either the economic theory or the economic data. If you think about it from the theory perspective, well, actually, it's not too far from the view set out by Turkey's President Erdogan, who, of course, famously said rate hikes drive inflation, rate cuts reduce inflation. And look what happened to Turkey, right? Turkey had spiraling inflation, a collapsing currency. So it doesn't seem like the theory worked out very well there. And then if we look at the data, well, it does seem to us that interest income has actually been a drag on consumption this year, not a driver. So an intriguing theory, one that's fired the attention of the markets, not one which we give a huge amount of credibility to.
So what should we be looking out for on Wednesday? Is this going to be a Powell that has to kind of walk back some of that dovishness that he did present during this, big December pivot that your tool is showing?
So it's interesting, Emily. I mean, certainly we're not going to hear the same kind of dovish messages from Powell that we heard in December. Already in April, we heard from Powell that the data wasn't giving him confidence in disinflation, that the Fed was prepared to wait with policy settings restrictive for as long as it takes to be convinced that disinflation is on track and price gains are coming back to their 2% target. The question at Wednesday's press conference is if he goes further than that and perhaps hints at a world where there are no rate cuts coming in 2024, or maybe in a risk scenario also raises the possibility, not as a base case for the Fed, but as a possibility that there could be hikes coming if needed.
Our thanks to Tom Orlick, Bloomberg Economics chief economist. Check out today's Big Take. It's just a fantastic read. The natural language processing tool, the FedSpeak tool. Very cool stuff. And at Big Take or Bloomberg.com/Big Take. Hey, a redhead crossing the Bloomberg terminal. Several of Glencore's largest shareholders believe that the company should retain its coal assets. That's according to people familiar with the matter, throwing a proposed spinoff into doubt. For more, check out the Bloomberg terminal. Okay, so rates are still high. Something else that's higher today, shares of Tesla having their best day in more than 3 years. This after Bloomberg reported that the company received in-principle approval from Chinese government officials to deploy its driver assistance system in the world's biggest auto market. Tesla did manage to clear two of the most important hurdles. It reached a mapping and navigation deal with Chinese tech giant Baidu, and it met requirements for how it handles data security and privacy issues. For more, we go to Craig Trudell, Bloomberg News Global Autos editor. He joins us from London. Craig, it's been a busy few weeks for Mr. Elon Musk. The company coming off its first year-over-year decline in quarterly revenue since 2020. The company sold fewer cars in the first quarter, and Tesla cutting at least 10% of headcount. And then over the weekend, Tesla makes this unannounced trip to China. What did he accomplish exactly that has investors so excited?
Yeah, I think the approvals that you mentioned off the top were significant and something that Tesla's been after for quite some time. Actually, it was on the agenda when Musk was last in China, and the reason he's interested in this is fairly clear. I mean, he's been able to charge $8,000 or $99 a month. And those are, prices that have come down recently. Actually, he was charging more for this previously in the U.S. But for a system that Tesla has marketed as full self-driving, and that's a misnomer, and that the system is not a self-driving system. It doesn't make Teslas autonomous, but it nevertheless is a higher level functionality. It enables Tesla to essentially, steer and stay between lines with with constant supervision of a human driver whose hands are on the wheel or eyes on the road. At least that is how the system has been designed. Not everybody follows that, and unfortunately, that's led to quite a few crashes. Which, I think that's one of the things that makes this so interesting is that there's been so much effort on the part of Tesla to put emphasis on how far along the system is coming at a time when U.S. regulators actually are finding serious faults with autopilot, which is the lower level functionality of their driver assistance systems.
Craig, what part of the approval was tentative? The Bloomberg News headline, Tesla soars on tentative approval for driving system. What happens next before Tesla can actually roll this out in China?
So we know that there's, an in-principle approval for Tesla to offer this in China. What we don't know is what sort of boxes still need to be ticked for them to pull that off. And, one of the factors that is going to be sort of determining of whether or not, it can happen quickly, I think, has to do with the Baidu mapping and navigation functions, because Tesla has sort of been a staunch believer in the idea of developing this technology without using maps. It's had this view that, we humans use our eyes to navigate roads. And so we should build, these driver assistance systems, with cameras that function as eyes and develop, the brains, if you will, for cars to sort of, decide what to do. They are very much in the minority in terms of, thinking that this is the best approach, that we don't need maps in addition to, eyes and machine learning. And they've really sort of bent to China's requirements here because, if you want to offer these systems in China, you don't have a choice. You need to partner with a handful of companies, all of which happen to be Chinese, to work with them on, mapping and navigation. And Baidu is one of them. And Baidu does have a sort of existing relationship with Tesla just for, navigation apart from, being used for driving systems. If you as a customer plug in where you want to go, Baidu supports, the turn-by-turn for you.
Hey, Craig, let's take a step back and just talk about Tesla in China, because a few years ago, I mean, this company did something that no other company in the history of China was able to do. It was an American company that opened a factory, not with a joint venture with a Chinese company. That's something that no other company had been able to do. Since then, a lot of other EV companies, homegrown EV companies in China have sprung up, and Tesla is no longer the only game in town. And in fact, BYD sales there surpassed Tesla sales. There are lots of less expensive models as well. What's the status of Tesla in China right now?
They really have been struggling for the reason of, just how much more affordable electric vehicles are out there, particularly at BYD. I think they really have absolutely pulled away from the pack, and Tesla has not been able to keep up. One of the other things that BYD does, in addition to just having a much more extensive lineup, is just regularly updating the vehicles that it has in its lineup. Whereas, Tesla just has a handful of vehicles that they sell. They do, from time to time, make updates, but for the most part, what the consumer sees and the design of these vehicles haven't changed a whole lot. And, when you just have, a couple of cars to offer, and BYD has, just absolutely just a very, very extensive, set of vehicles, it's difficult to keep up. And so, I think the value for money that some of the other brands have been offering have been, difficult for Tesla to answer. And they've really cut prices to a significant degree to where some analysts are doubting that, Tesla's earnings, that there's much of anything left in terms of operating for their business. And so that's another reason why this, incremental revenue boost or potential bit of incremental revenue from, these driver assistance systems is a big deal.
Well, check out this story and more on the Bloomberg terminal. This is a Bloomberg exclusive reported early this morning. Tesla shares, by the way, up 14.7% for their biggest single-day move going back a few years. Joining us, Craig Trudell, Bloomberg News Global Autos editor from London. Craig, thanks so much for that. Really do appreciate it. As I mentioned, Tesla shares higher by the most since going back to March 9th of 2021. Taking a broader look at the market, still seeing some green there. The S&P 500 up 0.3%. Well, coming up, we talk about the long-held view that nuclear reactor closure.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg, top experts, great questions. From the world of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern, only on Bloomberg TV and radio. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
On the next episode of The Circuit, Barry Barra's risky plan to reinvent General Motors.
Doing what you've always done, if it's not working, you can't keep doing it. By 2035, our light-duty products will be all electric because that's the future.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We have got the Dow, the S&P, NASDAQ all advancing right now. 14-point gain for the S&P 500 index, with the S&P now at 5114, up by about 0.3%. Dow Industrial is doing a little bit better right now, up by about 0.4%. We got the Dow higher by 138 points, while NASDAQ is up 57, a gain there of 0.4%. 10-year at 4.60%, with a 2-year now yielding 4.97%. Spot gold up 0.2%. $23.44 the ounce on the precious metal, while West Texas Intermediate crude is lower. WTI down now by 1.6%, $82.51 a barrel on WTI. Bottom line here, stocks are rising as a solid earnings season props up the market, despite bets the Federal Reserve will keep rates higher for longer. Paramount Global up after Bloomberg reported that the Redstone family and Skydance Media CEO David Ellison have both offered concessions to make a possible change in control, but the media company more appealing to other investors. Meantime, the New York Times says Skydance offered Paramount a $3 billion cash infusion. Paramount Global shares up now by 3.8%. Again, recapping, stocks higher across the board. S&P now up 14. That is a gain of 0.3%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. Okay, something really interesting is happening in the world of electricity generation here in the U.S. and the way that people are thinking about nuclear power right now. So more than a dozen U.S. nuclear reactors that have been shut down in recent years. Maybe they were too costly to operate. They were struggling to compete against renewable power. And also, they were struggling to compete against plants that burn cheap natural gas. Conventional wisdom long held that these closures were permanent. Now the industry is rethinking that view. Will Wade is Bloomberg News power and renewable energy reporter. He joins us here in the Bloomberg studio. So, Will, as you mentioned, this is as you read in the piece, which I just read from, this is a story about economics. It's a story about numbers here. Yeah. These are power plants that were once thought to be too expensive to operate. But something happened over the last few years that changed the equation. What was it?
Well, so nuclear power plants are big, expensive to operate. They need a lot of security. It's a complicated thing to build. I've been covering nuclear for about 5 years, and when I started, the only real story was which plant are we going to close down next? And I started keeping a spreadsheet a few years ago, and I tracked 13 reactors that shut down since 2013, and they were all shut down ahead of time, before they were supposed to run out of operating time. And every time it was like, we just can't compete. Gas is cheap, solar is cheap, wind is cheap, nuclear is expensive. So they all shut down, and I asked everyone, I was like, well, is that permanent? They're like, oh yeah, we're never turning those things back on again. But in the past maybe 2 years or so, there's been a reversal, and it's really about climate change. Nuclear is carbon-free energy, and people are starting to say, we really need those nuclear power plants.
So it's not as much about how expensive natural gas became in the wake of Russia's invasion of Ukraine globally,
no, that was an anomaly. It went up, it's come down. It's pretty cheap right now.
So it's less about economics and more about renewal, more about clean environmentalists.
Energy. Yeah, it's about clean energy.
But what's interesting about that is environmentalists hated nuclear power plants for so many years.
And some still do. I mean, there's still reasonably strong opposition to nuclear power plants, and it's true. The nuclear waste is really bad stuff. And it's not going away. It's still there. But what I like to say is that the prospect, the potential threat of a nuclear disaster is now being, compared to the definite threat of climate change.
So who is actually behind these changes? This is environmentalists persuading politicians now to reopen this? This is just the science community?
Oh, it's coming from all sorts of directions. One of my favorite stories from earlier this year, last year actually, was about Miss America, who is a huge pro-nuclear activist. Well, not the one we have now. She did relinquish the crown, but last year's Miss America. And all of these young kids, all these 20-somethings, there's a huge wave of young people saying we need nuclear energy. There's a groundswell of support for it. It's been coming from everywhere.
Yeah, it's pretty wild to see. I mean, okay, so let's talk about certain plants. In your piece, you mentioned a dozen plants over the last few years that have been shut down. You weren't able to figure out the names of the ones that could be reopened necessarily, all of them.
Okay, here's the name you want to know. It's Palisades.
Okay.
So of all the plants that I tracked that were shutting down, Palisades was the last one that shut down in 2022. And almost immediately, it's in Michigan, people were starting to think, oh, maybe that was a mistake. Even before it shut down, a couple weeks before it shut down, the governor was sending around a letter to the energy department saying, can we not shut it down? Can we figure out a way to keep it open? It did shut down, but almost immediately the company that bought it, its name is Holtec, started saying, we could keep it open. We can figure out a way to turn this around. They've got they just got a couple of weeks ago a $1.5 billion loan from the Department of Energy to restart it. And there was another one in California, Diablo Canyon, that was going to shut down.
My hometown nuclear power plant.
That's right, Tim, I know.
Yeah.
So that was slated to be next, but the California state government started saying, we actually should keep it open for the clean energy.
What about 3 Mile Island? You mentioned that one in the piece as well.
Okay, so there's 2 3 Mile Island reactors. One of them everybody knows. They had the accident in 1979. It's been shut ever since. The other one shut down in 2019. It ran for decades without incident. That's one of the plants that I've heard mentioned by name as maybe it could reopen. I talked to the company. They're not saying, there's no plans. They're not talking about doing it. So something to keep in mind is that the shift here, we don't have definite plans that I'm hearing about. We're definitely going to open this plant or that plant. But what I'm hearing is these things that everybody thought was like dead, never coming back. People are starting to think, maybe we can bring them back. Now, some of them, they're already being dismantled. The companies are tearing them apart. Those aren't coming back.
Like our neighbor,
like Indian Point, north of New York City.
What's going on there?
They're tearing out apart.
Done.
Yeah,
no way.
There's a big hole in the containment zone. You don't want holes in your containment zones.
No, then it's no longer contained.
Right. So that, it would cost too much to try and fix that. There's no point. But there's others that have just been sort of mothballed and they're sitting there. Those could potentially be turned back on. It would take some work. It would cost some money, but it's doable.
What about, forget turning on the old nuclear power plants that have been decommissioned. What about constructing new ones, which we've had one in recent years open here in the U.S.
2. You didn't see the news today.
Okay, today there's a new one.
Yes, Vogtle 4 went online this morning.
Okay.
So this is in Georgia. It's the only major nuclear project in America in recent decades. They were like, I don't know, 10 years late and $15 billion over budget. They were building 2 reactors. One of them got switched on last year. The other one officially was announced this morning. So that's good news, but it's clear. It's a big project. It costs a lot. The potential for going over budget is notable.
Does it show that there is an appetite, now that environmentalists have shifted their view, does it show that there's an appetite for these expensive projects, if they are indeed green, save for the nuclear waste?
Okay, well, here's another shift I've been tracking because I watched the Vogtle project for years as it took longer and longer and longer, and the cost overruns got higher and higher and higher. The only thing I ever heard is, we're never doing that again. And maybe in the last year or so, I've started to hear, maybe we could do that again. So, again, nobody's announcing plans to do it, but just the idea that people are starting to say, maybe we could, that tells me there's a big shift.
Can we zoom out a little bit? What does this all mean then for the future of renewable power? I guess with these reopenings, how close are we getting to actually having a significant portion of the U.S.'s energy supply rely on nuclear?
It's going to happen, but it's a slow thing. Nuclear is a really slow industry to cover. The next thing you want to be watching for are small modular reactors. It's a different generation of nuclear technology.
And there are a bunch of startups working on this.
There's a couple dozen that I know of that are working on it. Probably not this decade, maybe 1 or 2 small ones this decade, but the 2030s we could see a decent amount of it.
Okay, let's get to the waste issue here. Because, as you mentioned, nuclear waste is not going away. Where does it end up going? And with this shifting view, is it viewed differently at all?
Well, the answer of where it goes right now is really simple. It goes nowhere. Every single reactor has a stash of waste in these giant steel and concrete casks out behind. There's no place to put it. There was initially a push to create a national repository. That kind of fell by the wayside.
This is Yucca Mountain.
It would have been Yucca Mountain. That was officially shot down after decades of talking about it. I remember people talking about it when I was in college. So for the moment, they all stay right there out behind the reactor. I was at a big nuclear power plant a couple weeks ago. They had a big stash way out back. There's some proposals to build sort of another consolidated site It wouldn't be like Yucca Mountain, but there were two of them. One's in New Mexico, one's in West Texas. They're actually really close to each other. Both state governments have kind of passed some legislation to make those projects unviable for the moment. So for the moment, none of it's going anywhere.
Yeah, if you're a state, you don't necessarily want nuclear waste coming to your backyard, I guess it's fair to say.
The thing about nuclear waste is, I mean, there's no denying it's dangerous, but everything is dangerous. You live near a coal plant, you might get asthma. You live near a gas plant, you're going to be exposed to gas. The people who run nuclear power plants, I've always been impressed with them. They handle the stuff very carefully. We don't have a lot of accidents from leaking nuclear waste casks.
Will, very briefly, the way you sum that up, to me, sums up what environmentalists have said in recent years. The idea of using nuclear power, the benefits outweigh the potential consequences, especially compared to burning fossil fuels.
I think everything has a risk, everything has a cost. You just have to figure out what risks you want to take.
Will Wade, Bloomberg News power and renewable energy editor here in our Bloomberg studio. Check out his story and all his nuclear power coverage at the Bloomberg terminal and, of course, at Bloomberg.com as well. We're seeing a little bit of selling in the S&P 500, now up 0.1%. The NASDAQ composite up about the same. Let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. Protesters at Columbia University defying that deadline to leave their encampment or be suspended. University officials gave student protesters until 2 o'clock this afternoon, more than half an hour ago, to clear out that encampment, but they're still there. They're still calling for a ceasefire in Gaza. They want their universities to financially divest from Israel, and they're calling for amnesty for both students and faculty disciplined for their part in the protests. Secretary of State Antony Blinken, meanwhile, in Riyadh, stepping up efforts to secure a ceasefire between Israel and Hamas in what may be a last-ditch effort to persuade Israel to not invade the city of Rafah. Blinken said with China's help, Russia, as it fights for territory in Ukraine, is producing more missiles, tanks, and armored vehicles at any time since the Cold War.
How has it been able to do that? Because it's getting massive inputs of machine tools, microelectronics, optics, mostly coming from China.
Secretary of State Antony Blinken in Riyadh trying to secure a ceasefire between Israel and Hamas while pushing for support for Ukraine. The Group of Seven Nations have begun a quiet diplomatic effort to keep the International Criminal Court from issuing arrest warrants for Israeli officials. Sources say the U.S. and its allies are concerned the arrest warrants may come just as Israel is getting closer to a ceasefire agreement with Hamas, and that could potentially jeopardize a deal. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
On Season 2 of The Circuit, we're walking with the titans of banking.
Hello! You guys love these meet and greet things.
Me
like,
too!
how are you?
And driving a warship through the Pacific.
You're not the typical Silicon Valley founder wearing a black turtleneck. Like, how does that play?
I am a little bit of a caricature.
Taking you around the world.
So we're kind of in the middle of nowhere. It's incredible that this is the site of the biggest Netflix production ever in Latin America.
And getting you closer to tech and business leaders like never before.
You have our money, you've got world leaders on speed dial. That's a lot of power.
Sometimes I think I'm just riding the Bronco and hanging out for dear life.
You driving a Hummer is pretty badass.
That's what I'm going for, like badass soccer mom.
I'm Emily Chang, your ticket to the front lines of tech, innovation, culture, and host of The Circuit. Wednesdays on Bloomberg Originals and Bloomberg TV.
earnings season is here.
I think we're all asking the same question.
Just how much earnings growth they're expecting.
Bloomberg is first to break the numbers.
Gilead is coming out right now.
We have Take-Two numbers.
Shares of Pinterest.
Lucid Group coming out with its earnings.
All eyes right now on NVIDIA.
A lot still to come.
With the smartest insights.
How much bigger could profit and revenue have been? Better than what the street was expecting.
Bang in line with estimates.
We will have full and instant analysis.
Continuing coverage on Bloomberg. Context changes everything.
Liquidity is the lifeblood of an airline. We make very conservative decision making about when we raise funding and how we raise funding. We try to diversify our sources, and we're always very focused on the actual rates. And we like to build in flexibility in these financing structures so that we have an opportunity to prepay debt when appropriate, so that we can continue to optimize the overarching rates that we're paying.
What have you learned with the dynamic move of the interest rates that we've seen from Chairman Powell? I mean, do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, but we also have to be nimble around that as well, because things change by the day. I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. They may not be a buyer at this point, but I do want to spend a lot of time in front of that other set that is a buyer at this point. They're interested. They want to be an early adopter of the stock. They're interested in the story.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. After pulling back for most of April, equities are staging a rebound today. We have got the S&P higher by 5, up by about 0.1%. Dow Industrials up 0.2%, higher now by 75 points, while NASDAQ is up 26 for NASDAQ, a gain right now of 0.2%. 10-year yield 4.61%, with a 2-year that's yielding 4.97%. Spot gold, little change, flat on the day now, up just 54 cents the ounce to $23.38, while West Texas Intermediate crude oil is down 1.3%, $82.66 for a barrel of WTI. Tesla shares higher by 14%. Elon Musk's whirlwind visit to China over the weekend is paying immediate dividends, with Tesla getting in-principle approval from government officials to deploy its driver assistance system in the world's biggest auto market. Tesla right now up 15.1%. Again, recapping the Dow, the S&P, NASDAQ holding on to gains. S&P right now up by 0.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thanks so much for that update, Charlie. Really appreciate it. Emily, I don't know about you, but it really seems like Las Vegas is having a moment right now. What do you think?
It is.
Yeah?
I see the sphere on my Twitter all the time, different concerts and people.
Do you see it on your
lights.
Instagram, though? Just on your Twitter? Or on your Instagram,
My
too?
Twitter.
Okay, Twitter. Interesting. Okay. So the Sphere is part of it. I think the Super Bowl was a lot. There are a bunch of pro sports teams, some new, some having moved, now calling the city home. Certainly seems like Las Vegas is shining. Also, got to think about gambling. It's also doing well in Vegas. According to the industry group, the American Gaming Association, last year the Las Vegas Strip experienced the highest year-over-year gain in casino revenue growth out of any market in the U.S. For an on-the-ground update, let's go to Patrick Nichols, President and CEO of the Venetian Resort. The PE firm Apollo Global Management bought the Venetian back in 2022. The resort now undergoing a $1.5 billion renovation. Patrick, welcome to Bloomberg Business Week. Give us a business update. How is business?
Well, thanks for having me, Tim and Emily. Business is great. We've seen, as you mentioned, kind of a record 2023 across the board at the Venetian, and the industry benefited as well. I think what's interesting about Vegas in the past few years is it's transitioned from really a gambling destination to something that's much more than that. And now with sports teams, as you mentioned, the Raiders, the Knights, the Aces, and the Sphere, it's become a very, very durable travel destination for our guests.
What about the impact of online gaming? Because now with online gaming, people don't necessarily have to go to Vegas to actually make their bets. I know that you guys do have a new sports playbook partnership with Yahoo Sports.
Yeah, we launched the Yahoo Sportsbook powered by William Hill just in time for this football season last year in 2023. It's been doing remarkably well. Just one of many new additions to the Venetian over the past few years. To answer your question about online gaming, I think what makes Vegas so special is that you can't get the Vegas experience online. So people come to Las Vegas and to the Venetian for so much more than just to put a couple dollars in a slot machine. It's about seeing Fish at the Sphere or seeing U2 or coming to the Super Bowl, eating at one of the best restaurants in the world and staying in fantastic suites. So, Vegas is a destination, and the Venetian within Las Vegas really creates its own experience versus what you get online.
I'm chuckling when you mentioned Fish because I have a friend who traveled to Vegas just to see the Fish show. I mean, lots of friends actually who did this at the Sphere, and they were like, it's indescribable, completely life-changing. It's just sounded like it was pretty cool. Speaking of the Sphere, how big of a boon is it to your business? Explain the partnership that the Venetian has with the Sphere, and talk a little bit about what it means to your business.
I mean, the Sphere's been very impactful. The Venetian has 4 theaters today. So we have, the resort was built 25 years ago. We're celebrating our 25th anniversary in a couple of days. And 25 years ago, theaters were a lot smaller than they are today. So, our largest theater that we have in the resort is about 1,800, 2,200 seats, which allows us to do a lot of really fun programming, a lot of great bands, and a lot of great entertainment concepts. But where the Venetian has historically kind of lacked a competitive advantage is the scale, really large entertainment offering. So the Sphere with almost 20,000 seats now sets us apart. We have these great 4 intimate venues, and now we have the largest entertainment venue in Las Vegas, physically connected to the resort. It's the easiest place to stay if you want to see a show at the Sphere. You should be staying at the Venetian. And it's been great. We've seen really strong results from U2 as well as Fish. I also had a lot of friends that I didn't know were Fish fans that showed up at the show. And it's been great for business. I think it's been great for the city. And we're excited to see some future residencies at the Sphere now soon.
So you're doing a $1.5 billion renovation. What is that going to look like? What can resort guests expect out of the new changes?
Yeah, it's a big undertaking. As I mentioned, we're celebrating our 25th anniversary later this week on Friday. And there's no better birthday gift than $1.5 billion. So we're investing, $1.5 billion into the resort. It starts first and foremost with our suites. So we're an all-suite hotel, 7,100 rooms, the largest hotel in North America, and all of our suites are getting a complete redesign. So we're embracing kind of a modern Italian theme, like something you might find in modern day Venice or Milan. And we'll start the renovation in the next few months with new renovated suites coming online in September of this year. We're also known as one of the largest convention hotels in the world. So if you have a big group convention and expo, you're likely staying at the Venetian. We have about 2.2 million square feet of convention and expo space, and we're investing just under $200 million to create a new cutting-edge meeting experience for our guests. And then, of course, F&B, entertainment, restaurants have become such a big part of the Las Vegas experience, so we're investing there. You'll see some new announcements coming soon on some new culinary offerings at the resort, and we're leveling up our gaming spaces as well with some new high-limit spaces, a redesigned casino floor at the Venetian, new poker room that opens later this summer, and just really excited. It's not just a cosmetic upgrade or cosmetic refresh that you might see elsewhere. really kind of a grounds up refresh of the resort.
Hey, Patrick, I got to ask about the exit plan for the Venetian. As I mentioned, it was purchased by the private equity firm Apollo back in 2022. You were instrumental also in Blackstone's deal to sell the Cosmopolitan to MGM the previous year, back in 2021. I mean, it's private equity. I assume they want to return. What's the exit plan here?
You know, my job as CEO of the Venetian is to generate as much cash flow and earnings and potential for this resort and take care of our team here on the ground, and I leave the exit plan to Apollo. You know, that's what they do. They're the most sophisticated investors in the world, and we'll let them take care of that side while we focus on delivering the best experience we can to our guests and our team members and delivering fantastic.
Do you see this as like a long-term position that you have, where you do the renovation and then you create a sustainable business moving forward, or do you see it as one where there's an exit and then you move on to your next thing?
I think for me personally, I love the Venetian. You know, I never had the dream when I was a kid to be running a casino, but now that I'm here, there's no more enjoyable business, no more complicated business, no more surprising business day to day than the casino industry. So it's a ton of fun. It's a blast being here every day and getting to work with the best people in the industry every day is just kind of a dream come true. So I love it here. You know, I treat every job as kind of it's probably the last one I'm ever going to have. So I'm really excited to be here, and we'll see what the future holds.
Patrick, we don't have a ton of time left, but who would you say is your biggest competition in Vegas right now? Who are you losing business to?
You know, thankfully, we're not losing business. We're actually growing our share. I think we're one of the few casinos in the city at the moment that is stealing share from our competitors. And I think that goes back to the investment we've made to Apollo's, you know, positioning of the resort. They're incredibly, you know, competitive and also resourceful.
Mm-hmm.
I think we have resources and speed that our competitors don't have, and that's a huge advantage for us. So we're right now stealing share. I think if we had to look at competitors, you know, there's the old saying, you know, you don't necessarily want to follow your competition because you'll end up there. So we are trying to set our own path and move forward at a clip that our competitors can't keep up with and bring innovation to the market as fast as possible.
Patrick Nichols, President and CEO of the Venetian Resort, joining us from Las Vegas. As we mentioned, Apollo Global Management bought the Venetian back in 2022. The resort now undergoing a $1.5 billion renovation. Patrick, thanks so much for taking the time to join us. Really do appreciate it. Well, the S&P 500 right now higher by 0.2%. The NASDAQ Composite up by a little over 0.2%. The Dow up by 0.3%. Coming up next, we're going to talk a little bit about the Colombia protesters who have now defied an order to leave and are risking suspension. That's coming up next on Bloomberg Business Week. This is Bloomberg TV and Bloomberg Radio.
I decided to acquire Indeed 12 years ago when I was 36. I couldn't speak English, but I decided to move to the US with my family. Okay, let's study English. Let's, manage this big, American company. But I could do it. Ages are just numbers. If you stay being very curious to run new things, you can keep doing that. So what we're trying to adjust is our company should be the place to maximize people's ability, people's talent, and people's passion, right? Our employees' passion. So We believe that if we can have the work or the vision, people can be passionate, and which is aligned with all what employee wants to do, that's the best way to maximize the people's ability.
Follow your passion.
That's right.
So whether you're 14 or 40 years old.
I think so. Because, what's the difference? I don't know. We might be totally wrong. That's how we have been running this company for 60 years.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is Bloomberg.
Now, your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Paramount Global shares are higher after Bloomberg reported that the Redstone family and Skydance Media CEO David Ellison have both offered concessions to make a possible change in control of the media company more appealing to other investors. Shares of Paramount Global, they're higher today, up right now by 3.5%. U.S. safety regulators are investigating Ford's Blue Cruise driver-assisted feature after a pair of fatal crashes involving the technology. The National Highway Traffic Safety Administration's Office of Defect Investigation opened the preliminary evaluation after it received notice of two battery-electric Mustang Mach-E SUVs that collided with stationary vehicles. Ford shares, they're down by 0.6%. Apple's iPad has been added to a list of big tech products hit by new strict rules in the European Union. The company has 6 months to make sure its tablet ecosystem complies with a raft of measures under the EU's Digital Markets Act. Meanwhile, Apple stock has been upgraded to outperform at Bernstein. Analysts say weakness for the latest iPhone in China is more cyclical than structural. Apple shares trading higher. Apple up now by about 3%. Well, even after a recent share slump, Lululemon Athletica's $46 billion market value ranks alongside consumer giants such as Kraft and Constellation Brands, and that does not sit well with Jefferies analysts. Analyst Randall Koenig is asking, does this make sense? Pointing out that Lululemon is now on par with the market cap of Keurig Dr. Pepper and Kimberly-Clark. He sees further declines for the stock. Lululemon down today by just about 0.9%. Those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. Let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. Protesters at Columbia University defied that deadline to leave their encampment or be suspended. University officials gave them until 2 o'clock this afternoon, nearly an hour ago, to clear out of their encampment. They're still there. They're going to continue to call for ceasefires in Gaza, the universities to financially divest from Israel, and for an amnesty for students and faculty disciplined for their parts in the protests. Also, we can tell you that police in riot gear are now arresting protesters at the University of Texas, Austin. We're going to continue to follow that for you. The U.S. and its allies are concerned that the International Criminal Court may issue arrest warrants for Israeli officials, just as that country is getting closer to a ceasefire agreement with Hamas. Sources say the worry is that Israel would back out of a truce if the ICC proceeds with those warrants. Group of 7 nations have already started those quiet diplomatic behind-the-scenes efforts to convey that message to the court. And a federal appeals court has ruled in a case likely headed to the U.S. Supreme Court. It ruled that West Virginia and North Carolina's refusal to cover certain health care for transgender people with government-sponsored insurance is discriminatory. Both states appealed separate lower court rulings that found the denial of gender-affirming care to be discriminatory and unconstitutional. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. Now back to Bloomberg Business Week with Emily Grafeo and Tim Stenovic.
Hey, thanks so much for that, Amy. Do appreciate it. Amy mentioned this story, Emily, that student protesters continuing to stay at Columbia University's West Lawn beyond that 2 p.m. Eastern Time deadline to clear out, defying warnings that they're going to be suspended for breaking multiple school policies. Should note that the standoff marks an escalation in tensions at the university over a pro-Palestinian encampment that was established a little over a week ago. We're going to be checking in during the next couple of hours with our colleague out in California, Karen Breslau, who's written a piece recently, among the most read on the Bloomberg terminal, about the graduation ceremonies that are now being called into question over these protests that are taking place at college campuses across the U.S.
Yeah, I mean, this is really escalating just when these college students are expecting their families to come. Graduation ceremonies really draw massive crowds, so it has been interesting to see which universities are modifying their ceremonies and whether some of them are actually even going to be able to happen if the protesters don't leave. I don't know exactly when Columbia's graduation is, but the point of the latest protests, they were trying to clear them out so they could start to prepare for the ceremonies, and the students haven't left yet. Yeah,
typically the Columbia graduation is in the middle of May, so the question is what it ends up looking like and if they are actually able to clear these protesters. Speaking of universities across the country, they've had ongoing protests since Hamas attacked Israel on October 7th, which prompted the nation's retaliatory bombardment in Gaza. The Hamas-run health ministry estimates that more than 34,000 Palestinians have been killed in Israel's campaign. Here at Columbia, the group leading the demonstration, known as the Columbia University Apartheid Divest Coalition, they've been protesting the school's ties to Israel and demanding it cut financial links to the country. Some of the demonstrators have been criticized for anti-Semitic rhetoric and for intimidating some Jewish students on campus.
And that Columbia graduation set for May 15th. 2024. So,
and at Columbia, it's not just, in a lot of these schools, it's not just one graduation. It's like, undergrad, then it's like, each school has its own graduation ceremony. I mean,
it's end of school. It's finals. Imagine trying to study.
Yeah, and also imagine being a parent who's paying, $100,000 a year for your kid to go to school, and these kids aren't, if they're protesting and breaking rules, they're not going to be able to get their degrees, according to
classes are canceled.
Yeah.
It's just like COVID. It's like students just had experienced a disruption yet again.
Hey, for those staying on TV, up next is The Close. For those staying with us on Bloomberg Business Week, we're going to talk a little bit about Amazon and Apple ahead of earnings. This is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
A critical week for U.S. markets with jobs data, a Fed decision, and earnings from two of the biggest stocks in the S&P. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Boston.
And I'm Alex Steele, and I came back for the right week. Yeah.
I know.
Earnings, Fed, and jobs.
I'm just surprised you came back. I heard you went someplace really exotic, and you decided back here in the studio with Romaine is where you
wanted to be. It was like Punta Cana or Romaine. I mean, it was no choice. All right, here's where we stand here within the markets. The S&P is up by about 0.1%, but we're sitting sort of just below the 50-day moving average, and retaking that would be quite something. Tesla, the best performing stock within the S&P. What this just tells me is it doesn't take a lot for Tesla to move a lot. Any sort of good news, maybe you can see that short covering, and I wonder if that's what we wind up seeing today. 10-year yield down by 4 basis points. You see a lot of buying coming in all across the curve, but particularly at the long end. We're going to get a refunding announcement any minute now, and it is the currency cross you got to pay attention to. Dollar yen 160. Couldn't believe it, Romaine. Woke up, saw that number, and now we're back down to 155. What a roller coaster.
Yeah, the one day, Alex, where I care about the yen, and you're out partying in the Caribbean. But let's start with big tech here, because a big question about whether big tech enthusiasm from last week actually carries over into this new week. Now, Apple and Amazon are scheduled to report over the next few days, with investors really hoping for more evidence that technology company profits can indeed keep propelling stocks higher. Morgan Stanley strategist Mike Wilson, though, he says that while the share of companies beating analyst profit estimates has been strong, the share reaction, meaning the prices, that's been muted as valuations were already inflated. We're going to come back to that in just a second. He sees pressure on stocks from higher interest rates. The 10-year yield, remember, which in February was trading as low as 3.8%, has since reversed and now remains perched around 4.6%. Now, it is possible, maybe even plausible, that equity investors this week do get some relief from those higher rates. While the Fed on Wednesday has telegraphed no intention to change its course, it is expected to tweak its quantitative tightening program, a program that so far has forced the Treasury to sell more debt to the private sector. Now, that's put a lot of upward pressure on rates. Now, the anticipated changes by the Fed are coming just a couple of days after that Treasury refunding announcement that Alex was just talking about. Those numbers just coming in, they were actually higher than expected, and we're going to get to that in just a second, because that announcement is really about whether the Treasury was going to stand by the January guidance that it would hold off of further increases in its refunding auctions, which now sit just shy of record sizes seen in the COVID crisis. And once again, crossing the terminal right now, they did not stand by that January guidance. A lot going on this Monday that we have to get to today, Alex. But our first guest that we actually have up, he's actually saying, look, this isn't about the Fed. It's not about the Treasury refunding. He's laser focused on Friday in that U.S. jobs report.
And we got a lot to get to before we get to the jobs report, right? We get JOLTS coming out. We also have the ISM and all those nice little clues to the jobs report. Here's where we stand with the whisper number. So this is WHIS Go on your terminal. You can submit where you think the jobs number is going to be, and then we nicely chart it for you on the terminal. And this is where we're at. That's why we call it a whisper number. We're just a little bit higher than 130,000, which is lower than overall expectations that you look at for the jobs number, coming in at 240,000. So a teeny bit lighter than you would have thought. So come on, make your point. Let's go in. Let's see what this winds up moving. We get JOLTS. Like I mentioned, you get ISM. And there's a lot going on with it. One, the churn is not as good, right? You also wind up having a lot of people, particularly in the tech sector, out of work for longer. And you also have small business hiring kind of taking a little bit of a pause. So a couple of flashing yellow lights there, Romaine, for the jobs number.
All right, let's get it going right now with Ian Lingen, head of U.S. rate strategy over at BMO Capital Markets, helping us kick us off to the close. And apparently, Ian, this is going to be a kickoff, I guess, to Jobs Day. Looking at your latest note here, you're basically saying the Fed, Treasury refunding, all that takes a back seat to what we're going to learn on Friday.
Well, I do think that we know a lot about what we're going to hear from the Fed. We know a lot about what Yellen can and can't do in terms of the Treasury refunding. And the only potential real surprise is if Powell were to suggest that the Fed's reaction function to the realized data has changed. And we just don't see that happening. So we're back in data watching mode, which really means it comes down to where do payrolls print and what do average hourly earnings look like for the month of April?
Without really getting too in the weeds here of maybe what that number shows, why do you think a one report would change or maybe not change, I guess, the course of the Fed?
So I think that at the end of the day, what we're looking at is another confirmation of status quo for the Fed to continue delaying rate cuts indefinitely. Because yes, the Fed wants to start normalizing rates, but the labor market has been too resilient and inflation has been too sticky. And if we don't see a disappointment on Friday or an increase in the unemployment rate that no one is expecting, then I think that at the end of the day, we just roll forward to looking at the next CPI print.
So, but add in the dots from the refunding, though, for example. So you're looking at April to June borrowing estimates now, $243 billion because of lower cash receipts, right? And there's a conversation about, are we going to pare back QT? And are we going to start hearing that from the Fed? If you put those two things together, what does that mean for the Treasury market?
Well, lower QT implies that the Fed's going to be rolling over more of its portfolio, which ultimately means there's going to need to be less issuance from the Treasury Department through the private market. So that's a net good. The flip side is we were looking for $177 billion, so a bit of a downtick in the amount of borrowing needs for the current quarter. Now we got a bit of an uptick, which means the big question is, where does Yellen choose to access that funding? And we've already been told she's going to use the bill market. And as long as the bill market is the stopgap, then it really doesn't mean a great deal for the broader Treasury curve.
So do you think that the 10-year hits 5% or 3% then first?
I think that there is for proximity alone, there's a much higher probability of hitting 5% before 3%, but I don't think we're going to 5.25.
Talk to us a little bit about how FX sort of folds into this. We talk about the resurgence, or at least the recent resurgence that we saw in the dollar. I know that's complicated a lot of things for folks overseas here. How does that fold into your outlook?
So at the end of the day, a stronger dollar is a net positive for the Fed when the Fed is attempting to stop importing or avoid importing inflation. Instead, we're importing deflation. Now, eventually, it becomes problematic for the export sector, which was part of the story that we saw during the first quarter, where net exports were a pretty significant drag on growth. In terms of balancing those two, I think that the dollar and the statuses of the reserve currency, even frankly, has taken a backseat to what's going on in realized inflation and the resilience of the jobs market. The Fed really can't do much else but stay on hold.
This gets to a broader question, and I know you don't really cover, like corporate equities and at least the corporate earnings side of it here. But when you look at the performance of these companies, I'm talking about their balance sheet and their income statement performance here, it seems to belie this whole idea that you're seeing softness in the economy. These companies are still growing. They're still producing profits. Does that not then become maybe a headwind for the Fed's decision?
I think you're precisely right. I think it is, as long as risk assets continue to perform and perform well, what we'll see is the net result being easier financial conditions, which pushes back against what the Fed is trying to accomplish. And perhaps more importantly, there's a wealth effect argument. As asset prices appreciate, whether they're homes or stocks, people feel like they have a greater capacity to spend. And I'd also make the observation that when we see headline revenues grow as well as profits grow in nominal terms, it's important to keep in mind that part of that is reflecting what's going on the inflation side because people don't report profits in real terms.
Okay, so wrap this all up for us with a trade. What is the best way to express these views that you have in the market?
I think that at the moment, fading any attempt to price in rate cuts sooner rather than later is ultimately going to be the right trade. When we know that the Fed has all the evidence that we need, we'll eventually see that cyclical re-steepening of the curve, and that's the curve, or that's the call that I think most people have been waiting to come to fruition, and it certainly has failed to materialize thus far.
Yeah.
All right, Ian, always great to talk to you. Ian Lingen there, who leads rate strategy over at BMO Capital Markets, helping us kick off to the close here on this Monday afternoon with a look ahead to those bells and earnings out of Paramount. But, of course, it's not going to be about the numbers. It's going to be about Skydance sweetening its best and final offer for the media giant. Details ahead of the company's latest results, Alex.
All right, plus a sit-down with the CEO of Chevron, Mike Wirth. It's his view on demand, M&A, and much more after earnings from Friday.
And a silhouette shift? I have no idea what that means, but our next guest, Barclays analyst Adrian Yee, going to help shed some light on that, as Lululemon may be at risk of shifting consumer trends. That's our top calls, and it's coming up in a bit. Stick with us. A lot to go here on The Close on Bloomberg.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
DOJ or other authorities
could face bigger challenges next.
It was going to keep Rain World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
One stock in the move is Paramount. Shares are up 3%. The takeover deal hanging in the balance here. The CEO, Bob Bakish, could be replaced as soon as today as the Redstone family and David Ellison of Skydance offer concessions to make a possible change in control more appealing to the company's other investors. Ellison is proposing to buy a $3 billion block of shares at a premium, and the Redstones agreeing to let non-voting shareholders approve any possible transaction. You all got that? Makes perfect sense, right? Here with the latest is Bloomberg's Chris Palmieri out of L.A. Chris, I've been away for a week. I came back, read the headlines, and I'm like, my gosh, this is a hot mess. Will it be more or less of a hot mess by 4:30 today?
More.
More, excellent. What are we going to learn?
Well, I could just say over the weekend it was a busy one. As you noted, the Skydance and producer David Ellison basically almost doubled the amount of money he was going to invest in Paramount stock. From $1.5 billion to $3 billion, as you said, and they'll be buying those shares at a premium. We don't know exactly what it is, but typically these cases are about a 20 to 30% premium to the market value. So that's the B shares. What they do with the money is going to be discussed still, whether it goes all to, or the majority of it goes to pay down debt, or whether some of it does some more share buybacks. That's going on as part of this new offer. They're, this is a complicated transaction, but they're going to give the Redstone family a little less when they buy out their National Amusements business, which is the parent, the holding company for their Paramount shares. But this is all still tentative. As we reported, the Redstones are sort of feel like they can give the minority shareholders a vote on this, although that has not been definitively decided. So much is up in the air.
So much is up in the air, Chris, but this gets to the idea, if for some reason Skydance doesn't come through, is there an option out there, a viable option out there?
Well, we've been told that Apollo is still interested. They may come back with a more formal offer that involves Sony Corp.
Would that get approved with Sony Corp attached to it? Would that pass antitrust scrutiny?
It would certainly be subject to more antitrust scrutiny because you'd be merging two Hollywood studios, and probably one of them would not stay. The lot and all might be sold, and also there's more issues with foreign ownership of a domestic media company, given that Sony is a Japanese firm. So there would be probably more regulatory hurdles, not insurmountable, but more.
Why do you think that Bob Bakish would lose his job?
He's already, well, number one, look at the stock price since 2021. It's gone from almost $100 to 12 or so today. He has lost the confidence of a lot of board members in the Redstone family at this point. There was a lot of opportunities to sell assets. They had offers for the Showtime cable networks, for BET. He ultimately decided not to sell them. He has also not been a fan of this transaction with Skydance. Not hard to believe, since he would lose his job either way. So for that and probably other reasons, he'll likely leave.
All right, Chris, a lot of drama there, and unfortunately, I don't think any of it's going to be about the numbers. It's going to be about those folks on the screen there. Chris Palmieri over at our Los Angeles bureau at Bloomberg, and I'm fascinated by this, particularly now that we kind of know that there's some tension there with Bob Bakish. And look, if you're going to get this thing done, I hate to say it, but I think certain people need to be out of the room.
But I love that we spent that whole segment, and we're going to spend this at 4 o'clock too, not talking about the actual stuff, like TV revenue, the entertainment revenue, direct to consumer. Like,
we'll be bad.
That doesn't even matter anymore. It's just like, how do you save a company that should have been maybe broken? You could make an argument should have been broken up before and wasn't. Yeah,
it should have been. And I think more importantly gets to this idea that this is kind of, you talk about the performance. One of the reasons the performance is so bad is because this is kind of unresolved. Maybe if you had a little bit more clarity and management there that were really going to be there long term to see this through, you can right that ship. So I think that's why investors are kind of skittish. They want to see this done sooner than later. We're going to talk a lot of today, of course, about Paramount and what's going on in the world of entertainment. And speaking of which, over at McKinsey, executives are using the likes of Eminem and Bob Marley to boost morale. Have you seen this story, Alex?
Yes.
So basically, McKinsey, which is probably like the most vanilla of vanilla companies out there, is basically saying, hey, look, you know how we can sort of boost morale around here is to play, hip hop from, 20 years ago and reggae music from, 30 or 40 years ago.
So apparently this was an event back in mid-April, and partners were encouraged to go and air any concerns or misgivings about the firm's direction to a soundtrack of rap and rock. And to top it all up, to go green, they were like pushed to maybe bike or use like a scooter to get there so they wouldn't deal with emissions. What?
So is this like the consulting equivalent of like, hat turned backwards and how do you do, fellow kids?
Yes, but like what is it? Like, who was sitting at the table and was like, this is going to do it, guys. Eminem is going to change our feelings in the offense.
You know who was sitting at the table? A bunch of McKinsey consultants came up with this idea. We love McKinsey, by the way. All right, stick with us. A lot more coming up here before we get in trouble. We're going to move on and talk about Lululemon. Barclays delivering a downgrade there. We're going to talk to the analysts on that call about the risk of a silhouette shift. That's coming up next here on The Close on Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. And you know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? What are y'all in trouble?
All right, let's get a view from the sell side with our top calls, the big movers on the back of analyst recommendations. And we start off with Apple, an upgrade to outperform over at Bernstein, with the analysts saying the shares have actually derated significantly due to that weak iPhone 15 cycle and concern about demand in China. He's telling investors, quote, buy the fear, and says the current weakness is more cyclical rather than structural. Shares of Apple having a pretty good day, up about 3%. Next up, Shopify raised a buy from neutral over at Citi. Recent channel checks by the analysts from employees, customers, partners, and competitors signaling a stronger e-commerce backdrop for the online retailer. The analyst touting his confidence in Shopify's upcoming earnings report, which is about a week and a half from today, and the long-term growth potential heading into 2025. Those shares a modest bid on the day, up about 0.8%. And finally, let's get right to it with Lululemon. Barclays cutting the athleisure company to equal weight from overweight and slashing the price target down $395. The analyst over there, Adrienne Yee, and her team are seeing what they call a silhouette shift in teen and young adult clothing as consumers and brands opt for a little overbig fashion trends. Tweaks to sizes and colors may serve as a short-term fix, but Yee ultimately sees the company taking a hit long-term. Those shares taking a modest hit today, down 0.8%. Those are our top calls here on the day, but we do want to stick with Lululemon, and I'm pleased to say that the person behind that call joins us right now, Adrienne Yee, U.S. Retail Senior Analyst over at Barclays. All right, Adrienne, let's get right to it and the silhouette shift here, because I guess Lululemon, it was all about tight yoga pants and relatively svelte, tops. One reason why I never even shopped there, Adrienne, for years, because I couldn't fit into any of those things. Now you're telling me that finally that I've lost some weight and can finally fit into their stuff. Apparently, we're now all going back to baggy clothes.
We're going back, Romaine, we're going back to real clothes. That's first of all, we're going back to real clothes. So the silhouette shift is actually based in denim. And we've been in a denim cycle that what I'll call big over little, so the skinny leg denim pared back to like a biggish top. We've been in that since 2007, for the greater part of about 17 years, which is kind of shocking. And so the emergence of these wider leg, baggier flares, right, the denim bottom has sort of started in 2020, 2019. And 5 years on, right, you're actually getting the transition from early adopters to mass adoption. And that's why it's starting. That's why this year it's going to start to be felt as sort of a real dollar a wallet shift.
Well, this is what I'm curious about, because I understand that Lululemon has kind of staked its sort of aesthetic around a more slender cut here. But are they not able to sort of pivot fast to a trend that maybe is a little bit baggier? Did they not have that capability?
They absolutely do, but it's two different things. So there's the actual shape of the bottom, right? So you see that they have sweatpants and they've moved on from the legging, flare legs, etc. So they've done a great job in the athleisure category. But I think, part of the call here is that people are going back to real clothes, right? They're actually not hanging out all day long in their athleisure wear. And so this is kind of the first post-COVID transition that we're actually seeing people go back and buy legitimate traditional apparel based and grounded with denim. It starts with the denim bottom.
Well, and then to that point, like if you work out, you have to have workout clothes because it helps with the wicking and the sweat. And if you're with a trainer, they need to see how your body's moving. Like that part makes sense. But then the athleisure part where I'm wearing it to go pick up my kid, that's the part that's changing. So who's going to benefit from that part?
Yeah, and that's the part where if you think about the cohort of new entrants, right, over this COVID period, they really got younger and younger as more of these kind of 15 middle school, high schoolers were staying home and playing sports. The entire teams, right, of these kind of middle schoolers and high schoolers would be clothed in Lululemon. So I think what you actually got over the past 5 years was indeed you got the age range to come down about a decade, which is great for lifetime value of the customer, but it creates a little bit more of exposure to this more fickle teen. And that's where we're seeing this trend movement where they're on an allowance, they're on a budget, and the incremental dollars, right, to get this new wardrobe that they need are coming out of someplace else within the budget. It's not about the bad consumer. It's about shifting dollars within the wallet to something that you don't have versus something you do.
So what's this worth to Lulu on the downside?
Right now, Lulu had already guided down, right? So on their last call, they had guided to kind of 10, 11% top line growth from an algorithm of about 15%. So a little bit of a haircut there. Most of the pressure is coming from the U.S. with upside coming from China. So where we went, we basically think that there's little upside to the earnings, right? When you want to be long a stock, you want it to be a multiple against upside raised earnings. And so that's really where we are. Multiples come in. I don't think you're going to get more contraction on the multiple. But again, we don't really see the upside earnings, and that's why we went to an equal weight.
All right, Adrienne, always great to talk to you. Good stuff. Adrienne Yee, really all over this. Of course, analyst over at Barclays covering Lululemon. And I should point out, too, I mean, I'm kind of joking about I didn't buy, like, the tights and stuff. But they actually have some really good shirts that are great for golf. And that was kind of my entry. And yeah, actually another golfer tipped me off to it.
How much are they?
Expensive. But they were, but they're, they wick away the, whatever technology. And they're great. But they're breathable. They're great. I bought one and then I went and bought like 2 others because I'm a creature of habit. But now, I don't know. And I feel like I'm just behind the times.
I feel like the golf stuff would be different. We have to ask Adrienne. But it feels like that's a different thing than the athleisure wear situation because you actually will use it and pay money for it. But couldn't you go to like a TJ Maxx and buy a wick away Nike shirt for like $20?
No.
Yeah, Yes, you can absolutely do
TJ
that.
Maxx.
This is,
What?
Yeah, designer store.
What is that? Is that where I have to like rummage through like a garbage bin or something to get it?
Okay, fine. You want to pay $300
I want everything
for
on
a
the
golf
shelves,
shirt.
nice and neat.
Go for it.
You know, a little personal shopper. Alex.
Oh my gosh, it pains my soul. All right, coming up, let's go to something that's going to help my soul, and that is Chevron. The stock report had earnings. The company had earnings after the bell, before the opening bell on Friday, and we talked to the CEO earlier today. Mike Wirth, CEO and chairman of Chevron, will be joining us next. That stock is up by 0.1%, and is really the upstream in their operational and production venue that did really, really well in earnings. We'll also take a look at its deal for Hess and kind of where it stands in arbitration now with Exxon. This is The Close on Bloomberg.
Let's suppose you're on a plane and somebody realizes who you are. They say, I have $100,000. I don't know what to do with it. Where should I invest it? Where should they put their money?
So today, it's a easier decision than it was maybe 2 years ago, because Treasury bills are 5%. So I would say, regardless of how much risk you want to take, you have to put a portion there. Then you would have to ask, really, an individual is the same, I think, as any institution. What is your time frame? Do you need to get access to this $100,000 in the next few weeks, the next few months, the next few years, not until you retire? And that will determine your investment decision.
So what do you think is the most common mistake investors make when they have 100,000, a million, or whatever they might have? What is the most common mistake you have observed that investors make?
I would say hubris and thinking you know more than you do, because every decision that you make has many, many layers. So as you're creating a portfolio, look at the risk as well, not just excited about the return.
And what's the best investment advice anybody's ever given to you?
Continue to learn about innovation in whatever you do, because that is where it's not exciting, that's where returns will go.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights.
How has that shaped your strategy for the bank?
Is this a new normal? Is this like a catalyst?
Do you think we're in a new phase for dividend policy overall? That's a great question.
I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Just about 3:30 p.m. here in New York. This is the countdown to the close. I'm Romaine Bostic.
And I'm Alex Steele. Okay, so I was gone for a week. What was the biggest thing I missed? Your takeaway for me?
Well, the market got its mojo back. You know, remember you had the big sell-off the week you were here, and then, you know, they managed to post some decent gains last week.
Okay.
I know.
So I kind of missed nothing.
That's about pretty much.
It kind of went like this.
So that's that. You missed some bad weather in New York, so it's good that you were away.
Probably better that I was away.
Yeah.
I also missed oil earnings for the big guys, which I did feel genuinely really bad about because Exxon, Chevron, I like covering them. But we did get to speak with Mike Wirth today.
Yeah, we did.
A day after earnings. So Chevron beat expectations for a second quarter. The company increasing global production by 12% versus a year ago. Its upstream side of the business was super solid. Now going forward, though, it's all about its acquisition of Hess, and that's mired in arbitration with Exxon. So we spoke to Mike Wirth, chairman and CEO of Chevron, and asked him about, we started off by talking about the short-term Permian production outlook.
We just continue to see productivity and efficiency gains, and we're getting more production out of the same inputs: wells, completion, rigs, completion crews, et cetera. So we expect to be, relatively flattish through the first half of this year. Growth in the second half to exit over 900,000 barrels a day, on our way to 1 million barrels a day in 2025.
So that's really back half weighted. Why is it back half weighted? What's going to sort of change?
Well, we're bringing another completion crew on in the middle of the year. So right now we're building up an inventory of drilled wells that are not yet completed, and then when that rig comes in, we'll start to put those wells on production. So it has to do with optimal capital efficiency as we bring equipment in, and nothing unusual. It's really part of the normal program. It's not a straight line every quarter.
You guys announced potential ambitions there in Nambia, an operating stake there in one of the areas, License 82. What's your outlook for Nambia? Like, what do you think that's going to look like? How invested do you want to be? How aggressive do you want to be there?
Well, it's certainly a basin that has seen some early exploration success by others. We've got one large block off Namibia that we expect to put an exploration well down in late this year or early next year. We've just acquired a large interest in operatorship in a second block there in a basin that has some of the signs of things like we saw in Guyana a decade ago. So there's a lot of work to be done, and there's no guarantees in exploration. But we're always looking to bring resource into our portfolio through exploration, through technology, and then also through M&A. And in any given period of time, the balance of those may shift around. But fundamentally, we need to be good at all three of those over the long haul in order to continue to create value.
Gallup announced a big discovery in Nambia last week and is rumored to potentially be selling some of its position. Would you be interested there?
Well, we certainly are always interested in acquiring a position in attractive blocks. I can't comment on any particular opportunity. We keep those discussions confidential. But Namibia and the Orange Basin offshore there is an area that we're quite interested in and very active in.
I am curious, Mike, about the other big deal that everybody wants to know about, and that's the deal with Hess, the expansion into Guyana and those oil fields there. Where do we stand right now with regards to what you're doing internally to close that deal, and where do we stand in the arbitration with Exxon?
Yeah, Romaine, so maybe 4 points. Number one, integration planning has been ongoing since we announced the transaction, and that's gone very, very well. Number two, the proxy will be mailed to Hess shareholders before the end of April, and the shareholder vote will occur before the end of May. Number three, we got a second request from the Federal Trade Commission, and we expect to certify substantial compliance with that in just the next few weeks and be through the antitrust review process. And then that leaves the fourth work stream here, which is to work through this arbitration process relative to the terms of the joint operating agreement. That is likely to take a little bit longer. And we'll have to see how the exact scheduling plays out on that. We don't have those dates pinned down just yet.
Do you think, though, that you can get this deal done this year in 2024?
Well, that's certainly our expectation. We're working closely with Hess in order to do that. The arbitration process has been initiated, and ExxonMobil indicated in an investor conference last month that they think 5 to 6 months is what this could take. We certainly believe that's a sufficient time frame within which to clarify the specific contract provisions here. And I think Hess has actually in their filings indicated that they've requested a hearing in the third quarter and a decision in the fourth quarter. So that's the timing that we're working toward in a process that is still unfolding.
Mike, are you guys having parallel negotiations aside from arbitration or no?
We're always open to conversations. In fact, before the arbitration process was initiated, we had been in conversations, and Hess had been in conversations with the other members of this joint operating agreement, and in an effort to understand their concerns and to address those concerns and seek resolution. The arbitration really ended those discussions at the time, and that's the path that we're on today.
Okay, so not talking quote unquote yet, yet. Mike, internally, are there Plan B conversations? Most experts think that you guys are going to win this, but if you don't get Guyana in some capacity, what is a Plan B?
We had laid out a very strong plan before we announced the Hess transaction, increasing our free cash flow at a 10% compound annual growth rate over the next several years. We've got more resource in our portfolio today by a substantial amount than we had just a decade ago. We've outlined growth plans for the next 10 years in our investor conferences. And so we have a very strong foundation going forward. We like the Hess transaction. We think it's good for the shareholders of both companies. We think it makes our company even stronger. But it was done because it would make us a better company, and it would create a premier company to compete and reward shareholders and be positioned for the energy transition over the long haul. But we were in very good shape without that. And so this is, we've got a good, strong foundation in either scenario, but we certainly are confident that we do have, the right interpretation of this contract and expect the transaction to proceed.
That was our conversation with Mike Wirth, the CEO and chairman over at Chevron. And if you take a look at the equity price, say, over the last year, Chevron has underperformed Exxon just in the last couple months, but it has given it a run for its money. Like, it has made up a lot of what it has lost.
Yeah, and I guess I'm curious, too. I mean, I know these fights are kind of typical in corporate America, but this seems a little petty.
This one isn't very typical because of the way it's structured, right? Like, if they just went and tried to buy Hess's interest in Guyana, that'd be one thing, but buying the whole company is a little bit different, and that's why it's kind of getting bogged down in all the arbitration, and why a lot of analysts think like it will go through, but until it doesn't, that could be an overhang and a big question mark / uncertainty.
All right, yeah, sure deal. All right, we continue our coverage here on The Close. I'll push ahead right now to some other earnings that we're keeping an eye on, and that is MicroStrategy. The shares have been bouncing around all day here ahead of the results after the bell. We're going to talk about more on what to expect from the software company, which is basically now Bitcoin hedge fund. That's a stock of the hour. It's coming up next here on The Close on Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question. Great question. Great question. Best question I get all night.
Bloomberg. Top experts. Great questions.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything. Season is here.
I think we're all asking the same question.
Just how much earnings growth they're expecting.
Bloomberg is first to break the numbers.
Gilead just coming out right now.
We have Take-Two numbers.
Shares of Pinterest.
Lucid Group coming out with its earnings.
All eyes right now on NVIDIA.
A lot still to come.
With the smartest insights.
How much bigger could profit and revenue have been? Better than what the street was expecting.
Bang in line with estimates.
We will have full and instant analysis.
Continuing coverage on Bloomberg. Context changes everything.
Welcome back. It's time now for our stock of the hour, where we're watching shares of MicroStrategy. Slightly higher ahead of the firm's earnings release after the bell. Bloomberg's just met and joining us for a bit more on that. And I'm sort of chuckling right now because we were having a great conversation off camera about kind of the evolution of this company. I mean, this used to be a pure play software company.
Yeah.
Now it's pretty much, for a lot of all intents and purposes, kind of more of a pure play to a certain extent in the crypto space. This has basically become a Bitcoin hedge fund.
Basically,
Yeah.
so this was known, to your point, Romaine, as an enterprise software company. So back in 2020, so Michael Saylor, the CEO of MicroStrategy, they actually started investing into Bitcoin, and really he did that as a hedge to be what was going to happen potentially with inflation. So when you look at that bet, and especially over the last 4 years or so, if you're looking and seeing how much money he ended up making off of that, we actually had a great story in the Terminal that looked at this. Tom Cantiliano was one of the reporters on this. And so basically the amount of money, around $400 million so far, that they've been able to make on just this year, when you think about that, stock's been up about 100%, and then also over 300% since actually 2023. But the big question, when you do have the spot Bitcoin ETF approval in recent months, what this really means for this company moving forward,
and
how
just
that
to be clear,
impacts
that money doesn't really flow to the income statement because he's not really selling it.
No,
right?
that's
so it's
correct.
kind of unrealized.
So those also don't include the paper profits that he's made off of this either.
Yeah.
So that's only just one sort of lens through what that is going. But then also, if you look at SERP, so the implied volatility move for this particular stock, it's actually relatively muted to how it's been over the last 2 years. So right now, if you look at that, the potential swing in either direction after the closing bell, once we get the report, it's actually around 2%. But if you look over the past 8 quarters, it's actually been closer to 6%. So it's going to be interesting to see what exactly plays out. And then obviously on the earnings call and what we hear from Saylor.
So now that I know we're talking about this stock and not Supermicro, which that's really why Romaine was asking before. I was like, what? That's a software company. What does it trade as who's going to be buying it for, and for what reason?
Yeah, so that's the million-dollar question moving forward, because also Romaine was talking about this earlier too, when it comes to sort of your exposure toward that and being a proxy. So a lot of people really were moving this because, especially when you look at Bitcoin up close to around 50% this year, and then also Bitcoin's been up close to around 300% over the past year as well. So if you're trying to look for that exposure, that's where other investors were looking to. The caveat is just with the spot Bitcoin ETF approvals from earlier this year, and sort of the correlation between how those stocks have performed relative to Bitcoin hasn't been closely as tied just in recent months because all of that's been happening. But people want to know more from those calls, exactly what their kind of future plans are as this all begins to roll out.
Makes much more sense.
It does.
It does. Versus the conversation we're having in
Yeah.
break, and I'm like, this doesn't make sense to me, guys. All right, Jess, thanks a lot. Really appreciate it. Jess Menton setting me all straight here on Bloomberg Television. The stock is down by about 0.5%. It has had quite a run. It has had quite a fall also as well. All right, coming up, we're going to count you down to the closing bells. And Witty Bahagonia, a CIO of Global Asset Allocation over at Northern Trust Asset Management, will be joining us. And I'm looking at a market here. I got to say, it's not doing anything. And you have to wonder, Romaine, is it going to be earnings? Is it going to be jobs? Is it going to be the Fed? We get all three this week. What is going to be that mover?
I think it's going to be all of the above. But of course, we had that conversation with Ian Lincoln. He talked a lot about this idea that the jobs report is really going to drive the day.
Yep.
But earnings are important too. Like I said, you mentioned Google. You mentioned, I'm sorry, not Google. Who do we have? Amazon this week.
Apple
this week. And a big one tomorrow after the bell. Supermicro scheduled to report.
Oh, excellent. And I have that preview all ready to go.
This is the close on Bloomberg.
Politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern, only on Bloomberg TV and radio. Context changes everything.
One of my greatest advantages, I own my company 100%. No board of directors. I make a decision, we move. And I had a guy say to me, runs a big media company. This guy ran a major division, Warner Discovery. Okay. It was just Warner Media at that time. He says, you know what, when we sit in our meetings, we don't talk about Disney. We don't talk about Paramount. We don't talk about Sony. He goes, you know who we talk about? I go, who? You. I said, really? He goes, yeah, you. I go, why? He goes, we are giant battleships, and you're like a little speedboat. And if there's gold on the beach, you run rings around us, get to the beach, take the gold, and by the time we turn our battleship around, you've already taken the gold. I go, that's right. I'm always going to be that entrepreneur. I started my company from my dining room table 30 years ago. 30 years ago. And I started by calling every television station, asking them to carry my once-a-week show. On average, they all said no 50 times, and I worked through about 50,000 no's to get 150 yeses. That guy that was at that dining room table trying to pay his phone bill is that same guy today, 30 years later. That fire is still in my belly. I still run scared, and I'm still running after that vision of building the world's biggest media company.
On the next episode of The Circuit, Barry Barra's risky plan to reinvent General Motors.
Doing what you've always done, if it's not working, you can't keep doing it. By 2035, our light-duty products will be all electric.
This is the countdown to the close. Romaine Bostick alongside Alex Steele. 10 minutes, Alex, until we get to those closing bells. And, well, the price action, not a whole lot going on, but I guess it's green, so that's an extension of the gains that we saw from last week.
Yeah, it is a little disappointing, though, because there's not that much movement here. But you do have communication services lower. You have the worst performing stock within the S&P. Say the second worst performing stock is Alphabet. Tesla, obviously, outperforming there. But I feel like this sets us up for a sort of dicey scenario into Amazon tomorrow and then Apple on Thursday when you have members of the FANG, Mag 7, yada, yada, not doing as well.
Yeah, absolutely. That's obviously been the big driver of this market, those corporate fundamentals, and we'll see if that story changes at all when we get those big tech earnings. Of course, we're also getting a lot of economic data as well, but we had a chance to catch up with Ian Lingen, head of U.S. rate strategy over at BMO Capital Markets, and we actually asked him why he's actually more focused on Friday's jobs report rather than anything else. Take a listen.
Well, I do think that we know a lot about what we're going to hear from the Fed. We know a lot about what Yellen can and can't do in terms of the Treasury refunding. And the only potential real surprise is if Powell were to suggest that the Fed's reaction function to the realized data has changed. And we just don't see that happening. So we're back in data watching mode, which really means it comes down to where do payrolls print and what do average hourly earnings look like for the month of April.
All right, Ian Lingen there over at BMO, helping to kick us off to the close just about an hour ago. And here to help us go to the close and those closing bells is Anwini Bauguna, CIO for Global Asset Allocation and Northern Trust Asset Management out there in Chicago. And Witty, I do want to start off here with that jobs report on Friday, because that really is going to feed in to what the Fed does next. And I know one report does not necessarily make a trend here, but are you concerned at all that all of those expectations that this would be the year where the Fed had the ability to cut rates, that might be long gone right now?
Hi, Romaine. Thanks for having me. I think job reports is indeed the key report to watch this week. I agree with Ian that we shouldn't be seeing dramatic changes in the Fed's reaction function. The one thing I would add is what I'm looking for in the jobs report is really the wage inflation data. I think what surprised me last week was market narrative around growth weakening, but inflation being strong. And I didn't quite see it this way, Romaine. I saw growth actually remaining very strong with personal consumption spending coming in around 3%. And inflation data, stickier this first quarter, but beginning to come down at a very slow pace. So I would look at the jobs report to again see those dynamics show up.
Right.
Where growth remains strong and we begin to see some improvement in the wage inflation data coming down slowly, but definitely in the right direction.
Well, let me play devil's advocate here. Right now, economists expect the unemployment rate at 3.8%. That's holding below 4%, where it's been stuck for quite some time. We had a GDP report, I think, last week that showed a slowdown in growth below 2%. And of course, now we're seeing a lot of reports, whether it's PCE or CPI, that shows persistent inflation. Based on the classic definition of stagflation, and Woody, and I'm sure you know this, some people would say that that is the recipe, that's the cocktail where we're headed right now. Do you believe that?
Yeah, I would disagree strongly with that view, Romaine. I think the 1.6% headline number on growth is extremely misleading. If you look through the details of that number, personal spending is around 3%. Business investment's fairly strong. The thing that brought that number down was really the volatility in the trade details and inventories. Both of those are really hard to predict, but the core of the U.S. economy is actually performing well above 2%. And so to me, this is by no means a stagnant growth environment. The thing that I will agree with you, Romaine, is that inflation needs to show some more improvement. And so far this quarter, it just hasn't. It's stuck at around that 4% number. And the month-over-month numbers are not going in the right direction. And that's why the wage data is important, because that's a key component of that services inflation that we look at.
It also really highlights, though, how good earnings have been. I think, 81% of S&P firms have beaten first quarter profit estimates. And I can imagine, okay, so maybe you over-predict and under-predict and over-deliver, sure. But when you have an Amazon and an Apple reporting this week as well, what is your take on how to play big tech in this environment?
So we don't actually make sector calls Alex, but if you look at broader earnings data, the growth numbers are expected to be around 3%. And what I like to look at is the breadth of earnings. Are we seeing earnings beyond big techs? And Alex, we're not seeing that this year. It's still very much in the first quarter, all about really strong earnings coming from the big tech, coming from those names, but nothing in the broader range of the sectors that we have in the S&P 500. And also looking beyond S&P 500 into smaller cap stocks, into stocks abroad, we're not seeing improvement in breadth. It's still very much a growth index dominated environment where value continues to underperform growth.
So based on that, what should be the best asset allocation in this environment?
So I hate to say this, but we're very, very, very neutral across all the major asset classes. We don't have a strong lean on any one major tier one asset class, as we call it. So we're neutral stocks versus bonds versus real assets and other asset classes that one might invest in. In other words, we're advising clients to stay close to their strategic allocation. The only one area where we have taken a strong position is in credit, where we are overweight high-yield bonds, because in this reasonably strong growth environment, default rates are likely to remain low, and the yield pickup you get from high yield right now is just very attractive.
All right, and Witty, always great to talk to you. Going to have to leave it there as we get closer to the closing bells. And Witty Bahuguna, CIO for Global Asset Allocation over at Northern Trust Asset Management. And Alex, this does seem to be a market that's kind of taking things in stride with 3 minutes until the bells. Stocks higher. I thought it was also interesting, too, that when you look at what's going on in the debt markets, there was a lot of expectations that the Treasury was going to hold still with that refunding. They boosted that refunding, and you didn't really see a huge reaction in the market. They seem to be taking it in stride.
Yeah, and I wonder if that's because they're expecting the Treasury to issue in bills, which demand should be sopped up versus anywhere else on the curve. But you're right, in that the 10-year is just down by 4 basis points. I wouldn't expect that once that headline crossed the top of the hour.
Yeah, and it was already down, I think, maybe like 3 basis points or so before that announcement came out here. So it gets to this idea that while investors, to a certain extent, they're always worried, but this idea here that things really aren't that bad, and they can at least make money in this environment. Maybe not in the most attractive areas, but you can find it, right?
And that Liz Truss moment when everyone's going to freak out and bomb Giuliani's are going to have their day in the sun.
Liz Truss moment. I completely forgot about it.
Exactly.
All right, we are moving closer to the closing bell. Stick with us. Full market coverage coming up right here on Bloomberg as we take you to the bell and beyond.
Beyond the bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Alex Steele. We're counting you down to the closing bell. And here to help take us beyond the bell. It's a global simulcast with, the entire family finally back as one. Scarlet Fu joining us in the TV studio. Tim Stenovic and, oh my gosh, are you telling me Carol Massar has the day off once again? So Emily Grafeo, a very capable Emily Grafeo, filling in for the ever vacationing Carol Massar. Welcome to our audiences across our Bloomberg platforms. Tim, what do you got?
I got a big week. We got Apple earnings on Thursday. We got Amazon tomorrow. We got the Fed kicking off its 2-day meeting tomorrow. We got April employment figures coming on Friday. We got a big week, Emily.
And we still have earnings as well. We have Apple coming up and Amazon as well and some smaller names. But of course, you got to focus on the macro, like you said, Tim, the Fed. Jobs Day. It is a very big week.
A very big week in which we see spreads narrowing, and you see a company like Boeing able to attract almost 8 times the amount of bonds that it has on offer, easily selling $10 billion of corporate bonds.
What's interesting, though, as I mentioned this earlier, is that 81% of S&P 500 firms have beaten first quarter profit estimates so far. That's a really big number. But the stock price hasn't really outperformed even if you have beaten. Of course, that's a Mike Wilson over at Morgan Stanley, just being a little bit of cold water on any kind of rally that we're going to see.
Yeah, he has a lot of cold water. I think his faucet only has one temperature.
He doesn't like rates at these levels.
But in fairness to Mike, too, because, there's a good point, though, too, because he was, you look at the revenue growth and the revenue beats, I should say, not as strong as the bottom line beats. And more importantly, when you look at the guidance that these companies have given, a lot of that has come in a little shorter than what folks were expecting. Let's walk you through the numbers here on this Monday afternoon. Modest gains across the board for the major indices here in the U.S., with the S&P 500 up about 16 points or 0.3%. A similar percentage move right out there for the NASDAQ Composite, also up 0.3%, while the Dow Jones Industrial Average is going to move higher by more than 140 points, or 0.4%, and the Russell, Tim, that's your outperformer, up 0.7%.
All right, well, we're getting some news that Paramount Global is announcing new leadership changes. CEO Bob Bakish stepping down from his role as CEO, not a surprise to those who've been following over the last few days. Paramount Global just out with a press release saying that Global CEO Bob Bakish stepping down.
Yeah, apparently he and Shari Redstone were not seeing eye to eye. There are a lot of offers made for different parts of Paramount that he at different points rejected, and as a result, they are not going with any one CEO as his replacement. They're establishing an office of CEO, which does that inspire confidence when the company is trying to sell
I don't even know
itself?
what that means.
Well, I mean, but look at who it is. I mean, no, it doesn't inspire confidence to answer your question. Though I will say this. I mean, when you look at who it is, you're basically talking about Greg Cheeks, who was running CBS. You're talking about Chris McCarthy, who was running the Showtime and MTV networks. And then they're bringing in Brian Robbins, who was, I guess, heading up Nickelodeon and some of the kids' programming here. So it's kind of a cross-section of all the major broadcast properties there. So maybe that provides some confidence that the people running this company now are probably more on the content side rather than, just on sort of the financial side.
But what does it mean for the future of Paramount Global as a standalone public company?
It means it's going to be sold, and it's sold soon.
That's where I'm going with this. So Shari Redstone, chair of the board, saying that Paramount Global includes exceptional assets that we believe strongly in the future value creation potential of the company. The question is, where does that value come from? Does it come from a new ownership, or does it come from staying independent?
Well, that's the other thing, too. I mean, we talk about, to Scarlett's point, whether this is a good idea to have basically 3 CEOs thing. But, let's face it, this isn't going to last long one way or the other. If this is sold, they're going to have to find some different management structure. And so this seems to be much more of a stopgap.
End of an era, though, for Bob Bakish, right? He's been at Viacom since 1997.
Yeah.
He was CEO of Viacom back in 2016, CEO of the combined company back in 2019.
Yeah, and one reason why he was able to rise and stay in his position was because he did get along with Shari Redstone once upon a time, a long time ago. That is no longer the case, and this is definitely a company, Romaine, as you were putting it, set up to be sold. The question is whether it will be Skydance that is the actual acquirer, and of course that's the Redstone family's preference, or Apollo and Sony, or maybe there might even be another dark horse candidate coming in here.
I do find it interesting if you just look at the 3 that are taking over, and you guys pointed this out, but it's worth spending some time on it as we're also waiting for the numbers to come out. Is you have Chris McCarthy, president and CEO of Showtime and MTV Entertainment Studios. You have the Showtime studio part. Then Brian Robbins is the president and CEO of Paramount Pictures. Then you have the movie behemoth. And then you wind up having George Cheeks, who's the CEO he'll be the CEO over at CBS. So then that's sort of the trifecta of what Paramount Global actually is. And I wonder how that sets up each of its areas to either be sold separately or then tried to together.
Yeah, and that's the big question, though, and a lot of questions about what the new structure would look like, whether this would be sort of a white knight coming in and buying the whole thing, or whether they're actually just looking for certain pieces of it. And I think, guys, if you're keeping an eye on the wire right now, I think we're actually finally getting the numbers for the most recent quarter, and they're pretty much what you would expect. A miss on several of the key metrics. I'll just give you the top and bottom line here. 1Q revenue coming in at $7.7 billion. The street was looking for about 7.74, and as far as the loss per share, or at least on a continuing basis, looking at about 88 cents here. Not sure of the comparison, but when you look at the 1Q adjusted EPS for continuing ops, they did beat there, 62 cents at 36 cents, so I'm not sure these numbers actually matter.
Shares bouncing around a little bit, but still higher in the after hours by a little over 2%. First quarter direct-to-consumer revenue coming in right at estimates of $1.88 billion. First quarter TV revenue at $5.23 billion, missing estimates of $5.33. But Scarlett, like Romaine said, the big question is, do these numbers even matter?
Do the numbers really matter? Well, if you're a potential bidder, they do, because the filmed entertainment revenue was actually one part of the business that beat analyst estimates. $605 million. The consensus estimate was for $577. And again, if you're Skydance, this really matters, because this is what their whole thing is, right? Skydance is making movies, and Paramount has this storied franchise, and that's what they would be buying.
Yep. Interesting, in the earnings release, the statement is from Naveen Chopra, the executive vice president president and CFO, so not even Bob Bakish there, just saying that the team delivered a strong operational and financial performance despite a, quote, dynamic environment we continue to operate in. Code, that's code.
Wow, what are you
for hot mess?
Hey, there are other companies out there reporting earnings. MicroStrategy, technology company that's really a levered Bitcoin play, is announcing its first quarter results. It has now 214,400 Bitcoin. First quarter loss per share at $3.09 versus estimates of $31.79. The first quarter revenue did miss estimates. Again, another question of to what extent these numbers matter, considering that people who buy into MicroStrategy are essentially buying this, levered Bitcoin play.
Yeah, are we surprised that the stock isn't moving more? Just either way, like doesn't the stock tend to move whippily with results?
With Bitcoin, that's what it seems like.
I like the way you put that, though. A levered play on Bitcoin. I mean, what's the difference between buying MicroStrategy versus an ETF at this point?
Well, that's the problem.
Yeah, well, it's funny though. I feel like a lot of the volatility in the stock comes not around earnings season. We had Jess Menton on earlier.